Hey everyone, welcome back to the RIBO Level 1 series. Today we're tackling the legislative side of things, the RIB Act and RIBO's bylaws. This is the stuff that sounds dry, but trust me, a chunk of exam questions live right here, so let's actually understand it instead of just memorizing names. First, what is the RIB Act? It's the actual Ontario law, passed by the provincial legislature, that creates RIBO and gives it the legal power to regulate insurance brokers in this province. Without the RIB Act, RIBO wouldn't legally exist. Now here's a mental model that'll help you the whole way through this topic. Picture 3 layers, stacked like a pyramid. At the top, you have the RIB Act itself, the law. Below that, you have regulations, specifically Regulation 989, 990, and 991. These are detailed rules made under the Act that fill in the specifics, like exactly what qualifications someone needs to get licensed. And below that, you have RIBO's own bylaws, numbers 1, 2, and 3. These are RIBO's internal rules for governing itself and its members. Here's why this layering actually matters on the exam. Sometimes a question will test whether you know which document governs a specific situation. For example, the actual licensing qualifications, like passing an exam or meeting the sole occupation requirement, come from Regulation 991, not from the bylaws. Getting that distinction right is often the difference between a right and wrong answer. Let's get specific now. Regulation 991 is the one that actually lays out who qualifies to become a licensed broker. There are 3 concrete requirements baked into this regulation. First, you have to pass the appropriate exam, or an approved equivalency exam if you're coming in from another province or already hold a recognized industry designation. Second is something called the sole occupation, or only business, requirement. This means your role as a RIBO licensed broker has to be your primary job. If you want to also work part-time somewhere else, you can't just do it, you need to formally apply for what's called a secondary business exemption first. And third, you need employment with a RIBO registered brokerage. Here's a subtle but important point. You don't actually need a job lined up just to write the exam. But you do need one to complete your actual registration and get licensed. Let's make this real with an example. Say Raj passes his Level 1 exam in March, but he hasn't found a brokerage job yet. That's fine, he was allowed to write the exam without one. But he can't become a licensed broker until a RIBO registered firm actually hires him. And let's say Raj also does freelance graphic design on weekends. Once he's licensed, he can't just keep doing that quietly. He'd need to file a secondary business exemption, or he'd be breaking the sole occupation rule. Now let's talk about the 3 license levels, because this comes up constantly in exam questions. Level 1 is the entry-level license. That's you, right now, working toward this exam. A Level 1 broker always works under the supervision of a principal broker. Level 2 is for brokers with more advanced technical and commercial insurance expertise, but they're still supervised by a principal broker. And Level 3 is the license that qualifies someone to actually be a principal broker, deputy principal broker, or supervising broker, meaning they provide leadership within the brokerage. Here's the key relationship to lock in. A Level 1 broker can never operate fully independently. Every single brokerage is legally required to appoint a Level 3 licensed individual as principal broker, and that person is responsible for managing the firm and making sure everyone follows the Act, the regulations, and the bylaws. So picture this. As a brand new Level 1 broker, you sell a homeowner's policy to a client. You're the one having the conversation, but legally, you're operating under your principal broker's oversight. They're ultimately accountable for your work meeting RIBO's standards, even though you're the one at the desk. Next, trust accounts. This is one of those topics that sounds like pure bookkeeping but actually protects consumers in a very real way. Every RIBO registered firm is required to have a trust account, and very specifically, the legal registered name of the business plus the words, trust account, have to appear on the account itself and on any related documents, things like checks or direct deposit forms. Why does this exist? Think about it this way. When a client pays their premium to a broker, that money doesn't actually belong to the brokerage. It belongs to the insurer, or back to the client, if it's a refund, until it's properly transferred along. The trust account exists to keep that client and insurer money completely separate from the brokerage's own operating funds. Here's a scenario to make this concrete. Say a brokerage's photocopier breaks, and they need $3,000 for repairs. Even if their trust account is sitting on $50,000 of client premiums waiting to be sent to insurers, they absolutely cannot use any of that money to fix the photocopier. That money was never theirs to begin with, and mixing trust funds with operating funds is a serious regulatory violation, not just bad practice. Now let's cover two types of insurance that brokerages themselves are required to carry, and yes, it's a little funny that insurance brokers need their own insurance, but it makes complete sense once you see why. Every firm must carry an errors and omissions policy, often just called E&O, with a minimum of $3 million per claim and $6 million in aggregate. They also need a fidelity bond with a minimum limit of $100,000. So what's the difference? E&O insurance protects the brokerage if they make a professional mistake. Picture this. A broker forgets to renew a client's flood endorsement before a major storm rolls through. The client's basement floods, the claim gets denied because that endorsement had lapsed, and the client sues the brokerage for their financial loss. That's exactly the scenario E&O insurance is designed to cover. A fidelity bond is different. It protects against dishonesty from within the firm. Think employee theft or fraud. Someone on the inside doing something dishonest with client funds or information. Last piece for today. Keeping your license active once you have it. RIBO requires every licensee to complete continuing education credits every year. This keeps brokers current on industry standards and regulatory changes. On top of that, your license has to be renewed annually, which means completing a renewal form, submitting your CE credits, and paying a renewal fee. Here's a detail that trips people up. The registration year runs from October 1st to September 30th for everyone. It's not tied to the date you personally got licensed. So if you get licensed in February, you're still renewing on that same October to September cycle as every other broker in the province. Let's bring it together. The RIB Act is the actual law that creates RIBO. Regulations 989, 990, and 991 fill in detailed rules, and Regulation 991 specifically covers licensing qualifications. The bylaws are RIBO's own internal governance rules. We covered the three license levels: Level 1, supervised entry level; Level 2, more technical but still supervised; and Level 3, which lets you become a principal broker. We talked about trust accounts keeping client money separate from the brokerage's own funds. We covered E&O insurance, which protects against professional mistakes, and the fidelity bond, which protects against internal dishonesty. And we wrapped up with continuing education and that October to September renewal cycle. Here's your exam tip. Whenever a question describes a scenario and asks which rule or document governs it, ask yourself, is this about qualifying to be licensed? That points to Regulation 991. Is it about the law itself creating RIBO's authority? That's the RIB Act. Or is it about RIBO's internal rules for how it governs its own members? That's the bylaws. That one framing question will eliminate most of the wrong answers you'll see on test day. That's the RIB Act and RIBO's bylaws. Next up, we're going deeper into the RIBO Code of Conduct, the ethical rules that govern how you actually treat clients day to day. Subscribe so you don't miss it, and see you in the next one.